The atmosphere surrounding XRP is becoming a bit more turbulent, even for those who have long held on to their tokens. And not just for the obvious reasons. It's a subject that has been on everyone's mind at least once in the world of cryptocurrencies. The Clarity Act, and how one news release could completely change the mood. Investors have been waiting for days for confirmation that the markup vote would be officially set, and each hour without any news has only fueled speculation. The difference here is that this situation seems to be occurring before the confirmation even comes. XRP had hit a few important technical levels as traders remained attentive to Washington, as though money were preparing for some big development. The current market atmosphere is one of nervousness, as many feel now is the time to act. A few days later, into the next week, could cause issues that may cause things to run behind schedule, which is why traders are sitting on the fence for every breakout that comes out of DC. The hub of the debate is the concern that banking groups are trying to do their utmost to delay it. There is still a lot of speculation that the big banks have been pushing aggressively against portions of crypto legislation, and anything that may pose a threat to their own control of financial products and yields. This may be the reason why, for many investors, the slow progress seems unbearably slow, despite the increased confidence in digital assets by the public. Many believe that banks are attempting to defend their dominance of the traditional banking sector and are going all out to do so, before the advent of crypto regulations makes things more competitive. As the XRP community grows increasingly frustrated, they believe innovation is being stalled by the might of the powerful institutions trying to protect their current benefits. Despite all this, people are still getting more and more hopeful that the law will eventually move forward, and as is typical in the market, many believe that the entire crypto space, particularly XRP, will reap significant benefits. The traders are now closely observing the charts, as technical indicators are starting to show signs of a possible breakout. XRP recently broke key resistance levels, and a number of moving average crossovers which traders were looking for finally emerged. Momentum is beginning to gain strength, and many analysts think confirmation over critical price levels may lead to heavy buying support. That is because many investors have been waiting for clarity from regulators, and they are seeing XRP as lagging behind other assets, which is growing their excitement to buy and hold on to it. Bitcoin and Ethereum already have solid gains, but XRP believers say that when the legal and institutional confusion subsides, XRP may be able to get into the market with a much higher rate. Meanwhile, however, the overall economic outlook is fueling the entire digital asset narrative. The increasing global tensions, lack of liquidity, and the substantial spending projected for AI infrastructure is raising concerns that central banks could once again inundate the markets with cheap money. Governments can't allow credit systems to fail, and they need trillions of dollars for the development of AI and infrastructure, many believe, and so a further flood of money is likely to happen. But in the history of such episodes, when liquidity pours into the system, markets react with a vengeance, and crypto investors see the cryptoverse as one of the greatest beneficiaries of the capital flow. This is a strange mix of fear and anticipation being fostered by this belief. For one thing, people are feeling economic pressure all over the globe. On the other side, they think that such forces may spark a historic movement in cryptocurrency markets. In particular, XRP whales keep piling in and transferring vast amounts of cryptocurrency from exchanges, and there are more institutional conversations taking place as well. So much so that there's a general sense that something significant is already happening under the surface. As regulatory conversations continue to be the focal point of news coverage, another major drumbeat has surfaced in the XRP space. The prospect of spot XRP ETFs inviting some of the world's biggest financial institutions. Since the reports of CoinShares' official withdrawal from submitting its spot XRP ETF filing in the United States, rumors began to circulate quickly. That move instantly sparked speculation because many began to ask questions about the possibility of smaller players stepping aside ahead of the prospect of entry by giants such as BlackRock and Fidelity. The withdrawals are officially announced in SEC statements, but the factors behind it continue to be hotly debated. There is the possibility that CoinShares actually determined the American market is getting too tight, particularly as other major institutions have planned to be in on the action and are expected to be rolling out massive resources and distribution. Yet others believe that the exit is just a tactic focused on other areas of the business. In either case, the market reaction made it clear investors are paying close attention to all developments related to XRP ETFs. Even rumors of an institution demand can suffice to give the community a much-needed boost, since the institution demand is now seen as one of the primary drivers of price movements ahead. The unique aspect of this situation is that when several ETF issuers vie for liquidity, the dynamics of XRP supply might shift. Over-the-counter desks, exchange reserves, and institutional sourcing channels are still hot topics as analysts contemplate the future of those channels given cryptocurrency restrictions in the US by courts. That legal distinction is important, as it could force institutions and ETF providers to seek out secondary sales of XRP in the market rather than buying directly from Ripple themselves. This has been a potential buying opportunity whenever demand increases and exchange liquidity keeps decreasing, says many investors. Furthermore, reports that have revealed millions of XRP leaving of exchanges have only magnified that theory further. If some of those moves are just shuffling bits around the inside of their wallets or moving from long-term storage, it doesn't matter psychologically or from the community's perspective. When exchange balances decline, investors equate it with the potential of tightening and act on it right away. Meanwhile, chat about Ripple Prime, OTC market liquidity, and institutional acquisition methodologies have been ramping up as traders look to compute where the demand will be coming from if ETF flows pick up. As the lower-priced OTC inventory runs out, some say institutions may be forced to purchase materials straight from open market, significantly increasing prices. In addition, there is increasing discussion on the overall trend taking place within global finance. For many, the traditional financial system is on the verge of collapse, particularly due to the increasing levels of debt and the dwindling liquidity. Massive AI expansion projects are likely to need to be funded with huge amounts of money, and some investors believe that governments and central banks will act on that, with policies that effectively will restart the large-scale monetary expansion without it being acknowledged. That prospect has put pressure on the suggestion that there could be a period where there is an explosive growth in the price of limited digital assets in the next cycle. The XRP community's hope is that the market has yet to truly realize XRP's potential as part of the financial infrastructure of the future. Backers remain enthusiastic about XRP being underpriced relative to the level they see it could achieve, citing the international payments, liquidity mechanisms, institutionalization, and the regulatory environment. But in the face of uncertainty, fear, and slowdowns, many investors believe the wheels are slowly turning for a big move. It's the feeling that everything might change very rapidly that keeps emotions up. The first confirmation that it votes, the first big buy of an ETF, or a sudden shift in liquidity can completely shift the momentum of the market, almost overnight. The emotional war that is going on in the XRP market now can be more compelling than the technical and/or regulatory war. Many investors are tired, but still sure that the greatest move is yet to come after years of delays, litigations, uncertainty, and repeated disappointments. That's where psychology is going to come into play, since the market tends to move the strongest just when people are scared most. The more savvy investors still caution that major gains typically come when the mood is low and when retail investors are beginning to slowly walk away. This notion has been bouncing back up as XRP has a history of making out-of-the-blue explosive moves that leave most people blindsided. Many longtime XRP investors will recall periods of time in which XRP was relatively unchanged prior to a sudden, rapid surge in market activity. The memory has created the belief that another aggressive breakout may occur when some catalyst is right at the right moment. Several traders are already singing God Candle, a rally following a regulatory clarity that is the product of bipartisan political backing, ETF momentum, and institutional demand all coming together in one. This could shift the sentiment completely should technical traders observe the support and resistance zones in mind. Now the conversation is not all about survival or waiting. It has been a matter of positioning, prior to the possible start of an acceleration phase. Meanwhile, the frustration with conventional financial institutions is also very high among the community. Decentralized finance and stablecoin competition are perceived by many investors as a threat to banks' business models, which may be one of the reasons behind banks' efforts to curb innovation. Many investors think that banks actively take measures to stifle innovation because of competition from decentralized finance and stablecoins. One of the biggest sticking points seems to be the notion that retail investors could potentially make better returns without going through the banking channel. Critics say that the large financial institutions wish to maintain an influence over loans, savings, and liquidity through the influence over the legislation, which will restrict the competition. This will be either partially true or false, but it is very much entrenched in the XRP story. Backers increasingly come at the situation through the lens of an old financial system versus new digital infrastructure. That emotional mindset has added to community belief. Now that investors see themselves as playing a role in a broader transition and not merely focused on a profit. Whale activity has likewise turned into a considerable mental consideration. As ever, there's an ongoing rumor mill of large XRP holders moving millions of tokens off exchanges and speculations that smart money could be getting ready for further upside. Outflows on exchanges are often seen as a long-term buying position first, instead of short-term selling pressure, which only helps to keep bull eyes on the bulls. All this time, retail investors are in a state of fear and expectation. Some are concerned about further delays. Some people are concerned about abrupt sell-offs. Some people are concerned about manipulation to generate sell-offs of weak hands. Others think it is those very shakeouts that are a precursor to the big moves up. The theme of the day is emotional control is more important than ever across the XRP community. When markets are particularly volatile and fear is plentiful in the headlines, most people find it difficult to be patient. That's why seasoned traders keep stressing the point of preparing versus reacting. They think most of the retail players are emotional when they get onto a market when the price has peaked, whereas when they are in doubt or exhausted, they get an opportunity to accumulate. Now, XRP is right in that emotional crossroad. Some regulatory events are coming up that could make a difference. The speculation surrounding ETFs continues to grow. Action by the institutions is becoming louder. Technical construction is developing. A liquidity crisis is taking hold in the global economy. All that is happening at the same time, and it's that convergence that's driving many investors to suspect there's something uncommon going on under the surface. The environment around XRP has definitely been changing, and if the breakout is yet to come, it will be the same one tomorrow. No more will XRP survive, and instead, people are asking how long it is going to last. Beginning to wonder what would happen if these moving parts somehow came together.